What if I told you the secret to financial freedom isn't making more money? It's restructuring your life so you can survive on one income and build wealth with the other. If you're single, it's living on 50 to 60% of what you make. If you're a couple, it's living on one person's paycheck. Sounds impossible, right? That's what I thought too. But this is the framework that took me from paycheck to paycheck to $47,000 saved in 3 years. Same income, different structure. I'm going to show you what one income foundation means, why it works when everything else fails, and how to build it even if you think you can't afford to. Subscribe if you want a system, not just tips. My name is Sarah, and this is the most important video I'm ever going to make. Because every other strategy, every tip, every hack, none of it works if you don't have this foundation. Let me tell you what one income foundation actually means. Because the name is confusing and most people get it wrong. It means that all of your fixed costs and necessities are covered by one income source. If you're a couple, that's one person's paycheck. If you're single, that's 50 to 60% of your income. The second income, or the remaining 40 to 50% if you're single, becomes 100% growth money. Savings, investments, debt payoff, building wealth, building freedom. Let me be clear about what this is not. This is not someone quitting their job, though it does give you that option if you want it. This is not extreme deprivation or living in poverty. It's living within structure. This is not only for high earners. In fact, high earners often fail at this because they scaled their lifestyle to match their income. Here's what it actually is. It's building your life structure so it doesn't require 100% of your income just to survive. It's creating margin, creating options, creating actual freedom. There are 3 versions of this framework depending on your situation. Version 1. You're a couple. You live on the lower earner's income, or you pick one person's income as your foundation. The other income becomes your growth money. Version 2. You're single. You live on 50 to 60% of your income. The other 40 to 50% is your growth money. Same principle. One person. Version 3. You have variable income, freelancer, commission, seasonal work. You live on your minimum guaranteed income. Everything above that minimum gets banked. The core idea is the same. Your lifestyle is funded by a baseline. Everything above baseline builds your future. This isn't about income level. A $40,000 earner can build this. A $150,000 earner often can't, because they bought the house and the cars and the lifestyle that requires all $150,000. Income doesn't determine financial security. Structure does. Now let me show you why this is the only path that actually works. Traditional financial advice says save 10 to 20% of your income. Max out your 401k. Build an emergency fund. Pay down debt. All good advice. But here's the problem. If you're living on 90 to 100% of your income, you're one emergency away from crisis, one job loss away from disaster. You're not building security. You're just drowning slightly slower. One income foundation is different. When your fixed costs are covered by your baseline income, you have actual security. If you lose the second income, you're stressed, but you're not evicted. You're not losing your car. You're not spiraling into debt. You have time to figure it out. If a better job opportunity comes up but it pays a little less or requires relocation, you can take it. Because your survival isn't dependent on maximizing every dollar of current income. Let me show you the math on security. Remember Alex and Jordan from the 2-income trap video? They make $95,000 combined. They live on both incomes. After all fixed costs, they have $270 per month margin. If either one loses their job, they're immediately in catastrophe. Can't pay rent, can't pay childcare, everything collapses. Now imagine Alex and Jordan built one income foundation. They restructured their life to live on Alex's $55,000 income. Jordan's $40,000 becomes pure growth money. If Jordan loses their job, they're stressed. But rent is paid. Childcare is covered. Food is on the table. They have time to job hunt without panic. That's not just financial security. That's psychological freedom. And here's why wealth building accelerates under this framework. Traditional approach. You're trying to save $500 per month out of your $5,000 income. That's 10%. It's slow progress, and every month that $500 is tempting. Car repair comes up, you rate it. Holiday season, you rate it. You're constantly fighting yourself. One income foundation approach. The second income is $3,000 per month. That's 100% growth money. It never touches your daily life. It goes straight to savings or investment. You're not trying to resist temptation. The money is separated at the source. You're not hoping to save. You're systematically building wealth. This is the difference between getting rich someday and building wealth on a timeline. Okay, how do you actually build this? It happens in 3 phases. Phase 1, the audit. Week 1 to 2. If you're a couple, you identify the lower income. Or you pick one person's income to be your foundation. Doesn't have to be the lower one, but that's usually easier. If you're single, you calculate 50% of your take-home. That's your foundation number. Now list all your fixed costs. Housing, debt payments, insurance, utilities, transportation. Basic food budget. Everything you have to pay every month. Add it up. Compare it to your foundation income. For most people, there's a gap. You're $500 short or $1,000 short. This is normal. This is why you're stressed. This is why 2 incomes still feels like not enough. You haven't built the foundation yet. You're living above your baseline. Don't panic. The gap isn't a judgment. The gap is information. It shows you what needs to change. Phase 2, the restructure, month 1 to 6. This is the hard part. This is where you close the gap. You need to examine your big 3: housing, transportation, and debt. These are your 3 biggest expenses. If you're going to close a $1,000 gap, you're finding it here. Housing. Can you move to a cheaper place? Can you get a roommate? Can you move to a different area or a different city? Can you downsize? Transportation. Can you go down to 1 car? Can you drive a cheaper car? Can you move closer to work and bike? Can you take transit? Debt. Can you restructure your loans for lower payments? Can you consolidate? Can you aggressively pay off one to free up the minimum payment? I'm not going to lie to you. This phase sucks. You might have to move. You might have to drive an older car. You might feel like you're going backwards, but you're not going backwards. You're escaping the trap. You're making short-term sacrifices for permanent freedom. Progress markers to look for. By month 3, you found $300 per month in cuts or restructuring. By month 6, you found $700 per month. You're tracking toward closing the gap. Real example, Alex and Jordan from the 2 income trap. They were $1,200 short of living on 1 income. They moved to a cheaper apartment, saved $300. They went down to 1 car, saved $250. They found cheaper childcare, saved $300. 6 months later, they'd closed $850 of the gap. Not all of it yet, but they're close. And they stopped panicking every month. Phase 3, the split, month 6 to 12. Once your fixed costs fit inside your foundation income, you split your financial life into 2 separate systems. Account A, your foundation account. 1 income goes here. This account pays all your fixed costs and basic needs. Everything is on auto pay. You barely look at this account because it's running on autopilot. Account B, your growth account. Your second income or your remaining percentage goes here. This money never touches your daily life. It has 1 job: build wealth. First, you build a $2,000 emergency buffer. Then you pay off high-interest debt. Then you build 3 to 6 months of expenses saved. Then you invest everything. You're not budgeting anymore. You're not tracking every dollar. You're operating 2 separate financial systems. One sustains you, one builds your future. Now let me tell you what this actually enables. Because it's not just about the money, it's about options. Option to say no. Your boss is toxic. Your job is burning you out. You can walk away because your survival isn't tied to that specific paycheck. Someone else can cover foundation costs while you find the right fit. Option to take risks. You want to start a business. You want to go back to school. You want to pivot careers. You can, because you have runway, you have breathing room. Option to have kids or care for family. One parent can go part-time, one can stay home for a few years. Your aging parent needs help and you can reduce your hours. You have flexibility, option to weather storms. Recession hits, layoffs happen, medical crisis strains your savings. It's stressful, but it's not catastrophic because your baseline needs are covered. This is what financial freedom actually means. Not never working again, not being rich enough to buy anything you want. It means working because you choose to, not because missing 1 paycheck means eviction. Let me tell you what this framework enabled for me personally. 3 years ago, my partner was in a toxic job. Came home miserable every day. We wanted them to quit, but we couldn't afford it because we needed both incomes to survive. We built 1 income foundation over 18 months, moved to a cheaper place, went down to 1 car, cut subscriptions, close the gap. My partner quit, took 3 months off, found a job they actually liked at a small company. Slight pay cut, but way better life. We could only do that because we'd built the foundation. A year later, I started a side business. Took 6 months to generate real income. We could only do that because we had margin. Last year, we moved cross-country for a better opportunity. No fear, no panic, because we had savings and structure. Freedom isn't a dollar amount. Freedom is having options. This framework gives you options. Okay, let me address the objections. The reasons you think you can't do this. Objection 1. My income isn't enough to live on one. Then you're living above your means structurally. That's not a judgment. That's a fact. Your options are increase your foundation income or decrease your fixed costs. Most people need to do both. This takes 1 to 2 years of restructuring, not 1 month. But if you don't start, 2 years from now, you'll still be trapped. Objection 2. I'm single. I don't have 2 incomes. The framework still works. Live on 50 to 60% of your income. Save the other 40 to 50%. If you can't, same answer. Earn more or spend less on fixed costs. The principle doesn't change. Objection 3. I have kids. Childcare is $1,400 per month. This is exactly why you need this framework. So that losing one income doesn't mean you can't afford childcare and have to quit your job. Childcare is temporary. 5 to 6 years. Your foundation options. Family care. One parent part-time. Stagger work schedules. Or accept that building your foundation during childcare years is slower, but start anyway. Objection 4. What if both our incomes are low? 2 people making $35,000 each is $70,000 combined. Living on $35,000 is hard, but it's doable with roommates or low cost of living area. The other $35,000 is $2,900 per month to build wealth. In 3 years, that's $100,000 saved if you execute. This framework doesn't require high income. It requires discipline and structure. I know it sounds impossible. I thought the same thing. But here's the truth. Staying where you are is also impossible. You're already stressed, already one emergency from crisis. The question isn't, can you do this? The question is, can you afford not to? Here are your 3 steps. Step 1, run your numbers this weekend. If you're a couple, list both incomes after tax. Pick the lower one or pick one person's income. That's your foundation. If you're single, calculate 50% of your take-home. That's your foundation. Now list all your fixed costs, all of them. Rent, debt, insurance, utilities, transportation, food. Calculate the gap. Foundation income minus fixed costs. If you're positive, you're ready for phase 3. If you're negative, you know your gap. Your gap is your roadmap. Don't panic. Just see it clearly. I put a worksheet in the description. Download it. Fill it out. Share it with your partner if you have one. Step 2. Pick one thing to change in the next 30 days. Don't try to close your entire gap this month. Pick one expense from the big 3. Housing, transportation, or debt. Research your options. Can you find a cheaper apartment? Can you refinance your car? Can you move closer to work? Goal. Find $200 to $500 per month in one area. Make a plan to implement it in 60 to 90 days. Progress, not perfection. Step 3. Open your growth account in month 2 or 3. Even if you haven't closed your full gap yet, start practicing the split. Open a separate savings account. This is your growth account. Even if you can only put $200 per month in it right now, do it. You're training your brain that these are separate systems. Foundation account pays for life. Growth account builds wealth. As you close your gap over the next 6 to 12 months, grow your growth account. 3 years ago, my partner and I made $89,000 combined. We lived on all of it. We had $1,200 saved total. One emergency from broke. We built one income foundation over 18 months. Moved to a cheaper place. One car. Cut everything we could. Closed the gap. Today we make $95,000. We live on $48,000. We save and invest $47,000 per year. We have $85,000 in investments now. Same income, different structure. This isn't a tip. It's not a hack. It's a framework that changes everything. If you're going to try this, hit like. Make it real. Comment your income and your fixed costs. Let's calculate your gap together. You'll see other people's numbers and realize you're not alone. Share this with someone who needs a real system, not another budgeting app. Download the One Income Foundation worksheet this weekend. Do the audit. See your gap. Your future starts when you build the foundation.